If we start with South Africa, obviously what the market was expecting was the ANC to do a bit better, to get closer to 50, let's say somewhere between 45 and 50, and would then be able to form a coalition with one or two small parties, and it would basically be business as usual. So the market was expecting continuity. Obviously, then the election results came out, and the ANC did far worse than expected, coming in at 40%. And that meant that they had to put together a coalition, including one of the bigger parties, which would either be the DA or EFF or MK. Now, obviously, from a market's point of view, the DA is the preferable option as being a more business-friendly party, whereas MK or EFF are seen as being leftist, populist parties with market-negative policies. So as we stand, and we now have a government of national unity in the making, including the DA and the IFP, and it's generally, I think, perceived as being a centrist coalition, and it's one where you will see broad continuity with some of the policy changes, the important policy changes that have been underway. I think that's good for economic growth. I think the market investors will want to see how this coalition works. We will want to see a bit more detail in terms of who does what. But I think overall, in the end, despite the surprise, I think investors are getting more than they initially bargained for. So in the end, it's turned out to be a positive surprise.
Given what you've just said, I can imagine you've been fielding all types of calls from investors wanting to know that what are you going to do from now? What risks are you assessing? Given the fact that coalitions can unravel, how do you respond to clients?
Look, I think the main thing and the message we've always said is that let's focus more on the policy and less on the politics. Because the politics can be quite noisy, and then obviously coalition politics is going to be something new to South Africa and at the national level. Obviously, we've seen at the local level, and quite frankly, it hasn't gone that well in many instances. So let's focus on the policies. Let's see if there is continuity with, for instance, Operation Vulindlela and reforms to get this economy growing again. I expect there will be, but I think we want to see what actually comes out of the GNU. And similarly, importantly, ongoing fiscal discipline. This is not a government that has any room to spend big. In fact, it's going to start off having to tighten belts and be quite disciplined on the spending side, because South Africa does borrow too much and we need to get government debt levels under control. So I think at this stage, optimistic for sure. But let's see what happens before we fundamentally change our outlook.
So I mentioned in the beginning that we've got these three emerging markets, Mexico, India, and South Africa. When we look at the stock market performance or some of the cues or signals you're picking up from the market performance from these three economies, what are we learning?
Yeah, so if you look at India, let's start there. I mean, the Indian election outcome saw the Modi party, the BJP, actually losing a majority of seats. So Modi is still the prime minister, but he also has had to put together a coalition. The stock market initially took that news quite badly, but that sell-off was brief, and Indian equities have basically recovered those losses. I think underlying the Indian growth story remains very strong. And if anything, kind of clipping Modi's wings a little bit, I think is positive. I think it's positive for the long-term rule of law in India and democratic institutions in India. So I think all in all, the outcome in the Indian election is market friendly. And that's what we're seeing in market prices. I think Mexico is a different story. There, again, the surprise was not that the incumbent party lost. There, the surprise was that the incumbent party did much better than expected, and is now in a position under a new president to actually tinker with the constitution and remove some of the guardrails on the power of the president. So there, the concerns are that you're going to get a weakening of rule of law. There's talk of, for instance, weakening the judiciary in Mexico. And also there's concerns that this new government, with its strong majority, will kind of step away from fiscal discipline and be quite loose in spending. And so Mexican markets have been under pressure, remain under pressure. The currency has fallen a lot. It's fallen close to 10% since the election outcome. So their things are a bit more uncertain at this stage.
Let's look at the idea of the real value unlock. Is it a case where you want to wait until, we have more details? How long from a historical perspective have we begun to see things change or markets react positively from your experience?
Yeah, so I think sentiment will improve in South Africa, and I think that will help South African markets. We've already seen the currency kind of strengthening somewhat. Ditto with bonds and equities, but I really think that investors will want to see more evidence in South Africa that growth is in fact improving. We saw the first quarter GDP number was negative, right? So we're not off to a good start this year. We want to see evidence that the reforms are taking place and that it's having a positive impact on growth. And I think similarly, as I mentioned earlier, on the fiscal side, I think it's quite important that we see that this coalition sticks to fiscal discipline, gets government debt on a much more sustainable footing, and then only I think will you start to see markets really value South African assets and unlock the value that is in South African assets, and start to see, for instance, rating agencies make more positive noises about South Africa.